Hello and welcome. It's Inside India. I'm Anisha Tank at the SGX, live from Singapore. Here are your headlines. President Trump due to arrive in Tokyo this hour on the second stop of his Asian tour before heading to South Korea for that potential meeting with the Chinese leader Xi Jinping. Ahead of that, U.S. and Chinese officials are setting the groundwork for a trade deal.
And I'm also anticipating that we will get some kind of a deferral on the rare earth export controls that the Chinese had discussed.
And it comes hot on the heels of Trump's meeting with ASEAN leaders in Malaysia, where he pledged 100% U.S. backing for the group. JP Ong is on the ground in KL.
Absolutely, Manisha. Fast and a flurry of deals really signed by U.S. President Trump with various countries here in the ASEAN summit, and also where the groundwork seems to have been laid for that potential meeting between President Trump and Chinese President Xi Jinping in South Korea. We'll parse out what this actually means later on in the show.
And Indian Prime Minister Narendra Modi is attending the ASEAN summit virtually, talking up trade ties with the bloc with an eye towards a free trade deal by year end. Welcome to the show. Let's take a look at Asian markets as we start this hour. The Nikkei breaking 50,000. Domestic demand very much a driving force. That's at least what the new policies of the Prime Minister Sanae Takaichi hope to achieve, and investors are taking that in their stride. Of course, U.S. President Donald Trump is on his way to Tokyo right now. He is expected to land soon, and there are very high hopes for the talks between him and the new Prime Minister. Also, we've seen cooler inflation numbers in the U.S., and so many are anticipating Fed rate cuts coming this month. China tech stocks, meanwhile, they've been surging on a pro-tech longer-term outlook from Beijing, a lot firing up markets across the region this hour. Well, these global cues will also be affecting Indian markets, which are coming online in about 45 minutes or so. Here's what Gift Nifty futures are indicating, and we're tipping our hat to a bit of a positive start after we saw some profit booking on Friday. Trading will resume in full swing, of course, from today onwards, after last week's Diwali holidays. And earnings season is back in full force as well after this festive period. So looking ahead with anticipation to that open over there. Now, our top story. The U.S. says it has laid out a framework for a trade deal with China. The White House says talks between both sides took place on the sidelines of the ASEAN summit in Kuala Lumpur in Malaysia. It comes ahead of a meeting between Presidents Trump and Xi in South Korea on Thursday. If both leaders sign off on that deal, it would eliminate the 100% tariff that Trump threatened to put on Chinese goods starting November 1st. U.S. Treasury Secretary Scott Bessent spoke to NBC's Meet the Press, and he said that agriculture and rare earths were key points of conversation.
I believe that we have the framework for the two leaders to have a very productive meeting for both sides, and I think it will be fantastic for U.S. citizens, for U.S. farmers, and for our country in general.
Okay, but you're not anticipating the 100% tariffs?
No, I'm not. And I'm also anticipating that we will get some kind of a deferral on the rare earth export controls that the Chinese had discussed.
U.S. Treasury Secretary Scott Bessent there speaking to NBC, and this comes as we close in on the Trump-Xi meeting on Thursday. We get to our China reporter Elaine Yu for more on this. Elaine, I know you've been tracking this story very, very closely. Can you bring us up to speed with Beijing's side?
Right, Manisha. So Beijing said that the two sides reached basic consensus on the arrangements to address each other's trade concerns, and that the two sides had candid and constructive exchanges on a range of issues, including the port fees on vessels, extending the trade truce again, so we might see that this time around too, and also on agricultural trade, a top concern for Trump. And if China starts buying soybeans from the U.S. again, that will be a political win for the Trump administration. And also they talked about fentanyl, and Li Chenggang, China's international trade representative, said that the U.S. could lift or reduce that 20% fentanyl-related tariff. And they also talked about cooperation on the law enforcement front when it comes to fentanyl. Now, Li also called for no more surprises. He said shocks and fluctuations in these bilateral trade ties in the past month is not something the Chinese side wants to see. And he said the U.S. position has been tough while China is standing firm and safeguarding its interests. Now, a commentary from Xinhua, the official Chinese state agency, said head of state diplomacy plays irreplaceable strategic guiding force in China-U.S. relations, and that it is imperative to follow the guidance and consensus reached by the two presidents. So Beijing's messaging here seems to be that let's not deviate from what the two leaders are agreeing on. And this upcoming meeting on Thursday between the two presidents will be critical in setting those terms. Now, Beijing didn't mention rare earths or the deferrals that Scott Bessent said he was anticipating, but it did say export controls is an issue that they exchanged views on. So we'll watch very closely what comes out of that. But now we're seeing trade becoming an extension of the tech rivalry between the U.S. and China. So rare earths and tech restrictions will very likely remain the key sticking point in these negotiations. Manisha.
Elaine, thank you so much for that. I think we're all looking forward with much anticipation, the markets as well. In the meantime, U.S. President Trump has been overseeing a number of deals and trade agreements. That's been happening over the weekend at the ASEAN summit. It's been very, very busy there. JP Ong joins us now live from Kuala Lumpur in Malaysia with the highlights. JP?
Yeah, Manisha, good morning. And definitely a lot of highlights in just about 36 hours since the ASEAN summit officially kicked off. And a lot of this really being driven by the presence of U.S. President Donald Trump, who is, as you mentioned, on his way or is about to land in Tokyo, actually, for the next leg of his Asia deal. As we know, this was probably one of the more important or more substantial ASEAN summits we've had in years, actually. Also because it seems that that framework or that groundwork that was laid to try and pave the way for a potential meeting between Trump and Chinese President Xi Jinping was laid out here in Kuala Lumpur on the sidelines of the ASEAN summit. And also because they did ink a number of trade deals, as you mentioned, with 4 ASEAN countries, the likes of Cambodia and Vietnam, saw their trade deals finalized. Thailand, seeing a framework that has been laid out that will mean that they were this close or very close to actually finalizing that trade deal that will see them getting a tariff of about 19%. Arguably the most important or the most interesting one was the one that the U.S. signed with Malaysia, not just because Malaysia is the host of the ASEAN, holds the chairmanship of ASEAN this year, but also because there were key elements, there are key components in that particular agreement that involved rare earths, establishing a pipeline of rare earths between Malaysia and the United States. According to Malaysia, they did some initial studies and said that there are indicative potential resources or rare earth resources that could be as much as 16 million metric tons if this is indeed verified, which means there's a huge opportunity for Malaysia to actually court some of these investments and also take a bigger role in the rare earth industry. And so far, they have actually cemented at least an agreement to potentially supply these to the United States. But keep in mind, Malaysia is also talking with the Chinese to possibly bring in rare earth investments into Malaysia. So again, this puts them in a very interesting position because there's a lot of opportunity for them in the rare earth space, but also a lot of steps and a lot of miles they have to travel, and also a lot of relations that will have to maintain between the United States and China, who are competing in this very, very critical sector. Manisha.
Yeah, and it also alludes to the complexity of coming up with these trade deals and making sure that they work, and the interdependence of all of these nations. JP, something else that was going on was on the India side. India's Prime Minister Narendra Modi addressing the summit virtually yesterday, but sending the country's Foreign Minister S. Jaishankar to represent India. So what do you make of this? Will it help the FTA review that India is seeking with ASEAN?
Yeah, I think, well, first off, Manisha, I don't think anyone here is taking the absence of Narendra Modi or taking it too badly, actually. He did mention that he had to stay back because of the extended Deepavali celebrations. It's who are we to question how good or how long an Indian party actually lasts? But also because of the talks and the importance of that free trade agreement with or the upgrade of the free trade agreement was stressed by Prime Minister Modi via that virtual address. in that address to the various leaders of the ASEAN, Prime Minister Modi did say that the themes of inclusivity and sustainability are actually themes that they share and they also hold important in India, meaning that there are areas for them to work towards in those particular arenas. And also, he also called the ASEAN bloc companions in the global south alongside India, indicating that the ties or the interest to build deeper ties remains intact. Perhaps more interesting also, Manisha, is the discussions held by the U.S. Secretary of State Marco Rubio alongside External Affairs Minister S. Jaishankar. And of course, the topic of the U.S.'s growing ties with Pakistan also came up. Secretary Rubio did say that just because they're building closer ties with Pakistan does not mean that they are forsaking India at the moment. They still hold India as one of their dearest friends and closest allies. And also he said that India is mature enough when it comes to diplomacy to understand that these are how things work. Sometimes you will be friends with countries that that your friend has no relations with, and vice versa, and does think that things can be smoothed out, and there is room for them to have stronger relations with Pakistan without undermining their own deep and historic ties with the subcontinent of India.
JP, thank you so much for wrapping all of that up. And it's very interesting because coming up on the show, it is hot and then it's cold. That is what we're talking about, the U.S.-India relationship as the two sides work on a deal. India says there's no rush, while the U.S. says things are moving at New Delhi's pace. Will we see an agreement anytime soon? That discussion right after a short break. Stay with us. Welcome back. You're watching Inside India. India's Commerce and Industry Minister Piyush Goyal is in Brussels for trade talks. He's set to meet EU Trade Commissioner Maroš Šefčovič with discussions focusing on non-tariff measures, regulatory cooperation and market access for businesses on both sides. Goyal's visit aims to give strategic direction and political momentum to the negotiations as India and the EU race to finalize a free trade pact by year end. In Brussels, Goyal will also meet German Foreign Minister Johann Vadeful, who recently postponed his trip to China, and the NATO Secretary General Mark Rutte. Before heading to Brussels, Commerce Ministry Goyal made a stop in Germany. Speaking at the Berlin Global Dialogue, he reiterated India's stance that it won't sign trade deals in a hurry. This even as an Indian government official said a bilateral agreement with the U.S. is very close. Meanwhile, a senior U.S. official commented that Washington is moving at India's pace on trade talks, adding it's not always speedy. Remember, India faces the highest U.S. tariffs in the world at 50%, a penalty linked to New Delhi's purchases of Russian oil. At the Berlin Forum, Goyal also questioned the UK and Germany's push for sanction exemptions, asking why India is being singled out. Take a listen.
I was reading in today's paper, Germany is asking for exemption from U.S. sanctions on oil. Now, these are UK already has sorted and probably got an exemption for procuring oil.
No.
From the U.S.
This is about the Rosneft deal, sanctions, I think, and we've sorted out the issues with Germany. We managed to do that very quickly, and I think the Americans will do something very similar.
So then why single out India?
Well, it's a specific subsidiary in relation to Rosneft.
We also have a subsidiary in India of the Rosneft.
Well, come and talk to us. My door is always open.
Very interesting conversation at that roundtable. In the meantime, Reliance Industries, India's biggest buyer of Russian oil, says it will comply with Western sanctions against Moscow. The company runs the world's largest refining complex in Jamnagar and has been importing nearly 500,000 barrels a day from Russia's Rosneft. With new U.S. sanctions targeting Russia's top oil producers and deadlines set for companies to wind down dealings, Reliance says its supply contracts will evolve to reflect changing market rules, adding that its diversified crude sourcing strategy will ensure stable and reliable operations, even as it maintains relationships with existing suppliers. Well, let's get more on all of this. Ed Price, a senior fellow at New York University. Let's just work through some of these issues and tie up some of the issues. I think one of the big points that you wanted to make was we need to look at all of these news lines in the context of the international ecosystem. What is this conversation around oil telling us about that ecosystem right now, Ed?
Well, thank you. I think what it's telling us is something profound, which is that earlier in the 21st century, economists got exactly what they wanted. They got an international economy that was integrated, an international economy that knew how to grow, and the one that was actually characterized by specialization. So the United States had the export of security services and fiat currency, and China and other countries would export goods to the United States. And that was a good thing, and then all the economists were happy, and we would all be happy forever. And at just that moment, we started to encounter problems with political science. We started to encounter problems with the small L liberal model of how countries get on with each other, because we don't. So I think that what we're seeing today with India, with Russian oil sanctions, with the summits in Asia and so on, all of this comes down to the same theme, which is that if international economics and economies of scale work, international relations doesn't necessarily work, and that is a story that is unfolding.
Although the politicians might be on that one side of that argument saying, well, the economics don't work, the politics do. I suppose it depends what side of that argument you decide you're on. When we look at it in the context of the India-U.S. conversation, when we look at it, and I think it was very interesting, some of the comments that came out of that roundtable discussion just then, and we heard the comments from Piyush Goyal, and he's sort of making the point that why does one rule follow for you, for the UK and Germany, for example, when it might come to exemptions, something that the British pivoted away from talking about? Why is it okay for you and not okay for us? How do you get past a conversation like that?
You don't. This conversation is now hardwired into the aforementioned international economy. I think you've made a really good point there about rules. One size does not fit all. There are rules in the international economy, but even since 1945, they've never actually been designed as universal or uniform. The United States allowed, indeed encouraged, developing economies to have a higher tariff rate because it was thought that that would better improve their ability to grow and to keep people out of mass unemployment, such as we saw in between the two world wars. So you're making a very good point. We don't. And arguments about the rules, inverted commas, and different rules for different countries as we address imbalances in the global economy are here to stay.
Okay, so let's talk about the pace at which things are going between the US and India. So the US has talked about New Delhi having its own pace, but there are those who would say when it comes to trade, and everyone is getting very excited about these talks between President Xi, if they happen, and Donald Trump on Thursday. But the key is, trade talks don't happen overnight. If you want to have a conversation about oil, about trade, whatever it might be, it doesn't happen overnight. The Indians are going at their own pace. Is there something to be said for that?
Yes, I think there is. I think the so-called Indian pace is the normal and proper pace for a trade negotiation. Traditionally, fiscal policy and monetary policy were quick. They were things that could immediately identify and respond to an economic cycle or a business cycle. And trade policy and financial regulation take time. And that's because once you've set those rules, it's very, very costly to undo them overnight or indeed over a decade. So actually, the strange pace that we're seeing is the move fast and break everything pace that we're seeing coming out of this White House. And it's a little bit rich for President Donald Trump to put a 50% tariff unilaterally on another country, on a country that really should be as close as possible to the US in the wider strategic sense. It's a little bit rich for the Americans to say, well, now you're moving too slowly, because of course that was too fast.
And yet, Ed, we've seen US policy vacillate. So we see the more aggressive approach and then the pullback. Then the talks happen, there's a reaction, and then we see the pullback. Can we argue that actually there is a relative pragmatism coming from the US administration? And so far as India goes, do you think that that is something that plays into these conversations and plays into the narrative at all?
I think so. I mean, people like me who typically tend to critique the White House as an analyst, we have one view, which is that more is being broken than is being introduced. If you were to sort of take the other side of that and be fair to the White House, you might say that there was method in the madness. You might say that in foreign policy, President Donald Trump is similar to President Richard Nixon in the sense that he wants to be unpredictable, and there is some benefit to being unpredictable in the current world. And that might well be the case. So far, I think we've seen more damage than we have seen gains, and that is for a simple reason. It's the US that designed this system for the US. So now that the US is dismantling this system, and particularly with its relations with India, as we can discuss, that's something I think that is more damaging so far. So look, I hope I'm wrong, and I hope a couple of years from now the international economy is thriving, but I'm never sure as someone who's a student of economics that tariffs and aggressive diplomacy is the way to do that.
Well, here's the thing, of course, when we're talking about India and China, and perhaps I'm being incredibly simplistic here, we are talking about potential future massive contributors to the global economy and to the global ecosystem. So we've already talked about here in our shows on CNBC about the plenum last week in China and how China, as we know, has a very long-term view in terms of its economic positioning. India is taking things slowly. It's obviously considering the pragmatic end of this. It's not reacting too fast. Is there an argument to see more of that coming from the United States? Or is the United States perfectly aware of this, that there has to be some level of pragmatic balance?
Well, you're speaking with someone who's made a career from being extremely simplistic, so there's nothing wrong with seeing things as they are and in simple terms. And I think, yes, you're right. What I want to say in response to that is that if world history and global power were measured by population, then India and China have already won. And it's only the fact that the United States has the innovation, the economy that it currently does, and frankly, Jeffersonian ideals and soft power, that the United States is a player in Asia at all. And so you're making a very good point. It's super important for the United States to sit down, look at its hard power, look at its soft power, and say, what are the two relative powers in relation to China and India, and how do they interact? I mean, I'll make one point, which is that when the current administration seems to want to use hard power in the world and to let everybody know that the United States military can find them anywhere in the world, that's one thing. But remember that the United States military is debt financed through the dollar standard, which is effectively soft power because people trust and like us. So you're right, all of these things are intertwined, and assessing China and India and their long-term behavior is the core thing that the United States should be doing right now.
Okay, well, obviously it's, from what I'm hearing from you, you're saying that it's not clear if the India-US relations are particularly good. So then how do they negotiate a trade deal if they're not sitting at the same table, theoretically?
Well, they don't, right? I mean, in theory, you do have to sit around a table. My concern about the U.S. and India trade relationship and strategic relationship is that good as measured by what? If we want to continue with a sort of neoclassical view of the world, and we want to trade widgets and commodities and have an international economy in which the dollar standard reigns supreme and everybody's trying to get as rich as possible, then India-U.S. relations will be good enough. And I do expect that this 50% tariff at some point, to your point about how the White House swings around, that will go away. But is the relationship between the U.S. and India good enough versus China? So the U.S. has decided that there is a competition with China. China has agreed, or the other way around, depending on how you look at it. But India has the deciding vote. If India sits out of that 21st century competition, that benefits China. And if India throws in with its fellow democracy, of course, that benefits the United States. So I'm not sure that putting a 50% tariff on India, even if it's removed later, helps the U.S. with what really should be its most important 21st century relationship.
Yeah, I mean, Ed, that was going to be my last question, but you already covered it, which was, do we really think that insisting on a 50% tariff is going to be the most pragmatic long-term option? And one wonders if at some point that breaks. Very briefly, I'm guessing that that is your view.
I think that the 50% tariff was the first time that I looked at this president and thought that is an outright mistake, simply because of what I just said about India and the importance of India in the international strategic environment, not just the economy. So let's hope that that goes away anyway, because it's damaging to consumers, it's damaging to workers. But it was a mistake, I think, and I think that the Indians moving at their own pace is an expected response.
Ed Price joining us live from New York. We really appreciate it, from New York University. Thanks for being with us here on Inside India. It's time for a quick break, but don't go anywhere. Highlights from a conversation with Brazil's Embraer is coming up as we discuss commercial aviation opportunities in India. Stay with us. Welcome back. You're watching Inside India here on CNBC, live from our Singapore studios. We're counting down to the market open in India. This is how we're shaping up right now. We've got a positive indication in terms of the start from the get-go, this coming after Diwali holidays last week. And so this is our real first chance to catch up. As many as 150 plus companies from the Nifty and the broader markets combined are reporting results this week. So it's going to be a good one. Anyway, with that, let's get you back to Kuala Lumpur, where President Trump's attendance kept everyone really busy. There were also business and investment-focused events on the sidelines of the ASEAN summit, and our JP Ong got to speak to multiple stakeholders. JP, we've had you running around, but it's been worth it.
Yeah, absolutely. And the last run I had to do actually we needed for a cup of coffee, because sometimes you need a little bit more fuel to keep up with all the fast and fierce developments here in ASEAN. And of course, we were also talking about some of the interviews we've done with some key CEOs here. And of course, it's always interesting to talk about aviation, Manisha, especially in this context, right now where we're seeing a number of airlines struggling to actually receive some new planes to try and refurbish their fleet and also make sure they can expand their fleet to take advantage of the recovering aviation sectors. 5 years since the COVID-19 pandemic, or 6 years actually since the COVID-19 pandemic started. High time flies, right? And because of a lot of these bottlenecks, it does create perhaps a window of opportunity for other smaller burgeoning plane manufacturers, the likes of China's Comac, for instance, or even Brazil's Embraer. We caught up actually the CEO of Brazil's Embraer, actually, Francisco Gomes Neto, actually, to talk to him about exactly whether or not he sees a window of opportunity for them to enlarge their market share, and also why they're actually quite bullish on India. In fact, recently they just opened a new office actually in New Delhi to try and pursue some of these opportunities and with the world's fastest growing, arguably the world's fastest growing aviation market. And also because remember, Embraer also has a significant presence in terms of providing defense products to countries like India. We asked him what the opportunities are right now in both defense and commercial aviation. Here's what he told us as part of our extended interview.
India offers a lot of opportunity for us in the third biggest aviation market in the world. I mean, we see opportunities in the defense with this MTA program, medium transport aircraft. So they want to buy between 40 to 8 aircraft at the size, more or less the size of the KC-390. So, and on the commercial aviation, we also see a lot of opportunities. I mean, also to connect the small cities, we believe we have the E175 E1 that can replace turboprops, and also the E2 that can help to also to connect small cities in countries around India. And we see opportunities in both. That's why we inaugurated a few weeks ago, 2 weeks ago, our new office in India. Now we are bringing people for engineering, procurement, sales, market, government relations, because we really want to grow and take advantage of that potential with the products we have.
Is it very competitive, or do you think it's growing still at a point where everybody can benefit? Embraers, the Airbuses, the Boeings, or is it a very competitive market still in India right now?
I think everyone can benefit, and I think the market is enough to accommodate all the companies, and good for the customers. They have more options.
Okay. The other thing too, Francisco, is that this is also a time when we're seeing Embraer as one of the major BRICS companies that have started to expand in this area. Can we talk to us about opportunities between ASEAN and, say, the BRICS nations like Brazil to deepen more cooperation? Do you feel like this is a venue that's actually creating more opportunities for companies like Embraer or other big companies in Brazil to get new business in this region that might not be seen as linked traditionally with?
No, absolutely. I mean, Asia today is the fifth, largest trading partner of Brazil, with a lot of opportunities. The trade is growing. I mean, 2009 was 2.9 billion. Now last year, 37 billion. It's growing, but we see opportunity for more, especially high value-added products like aircraft. And as I said before to you, we see a lot of opportunities in the region for our products, and not only to sell. We want to cooperate. We want to bring opportunities for more training centers, services centers, technology transfer, and the purchase of local parts and components.
So it's a bit of a double-edged strategy, actually, for Embraer as they enter the Indian market. On one hand, it's the third largest aviation market, arguably one of the fastest, if not the fastest growing in the world right now, which means there is a growing pie that they can take advantage of and perhaps establish market share before it starts to get even more competitive. But it's also going to be, they're also facing an uphill task because, again, that global duopoly in Boeing and Airbus continues to be something that companies like Embraer and China's Comac, for instance, are finding it difficult to actually break through. But the other thing that's also interesting here, Manisha, is that they've also established a closer cooperation with Mahindra, actually, to produce their hallmark defense product, the C-390 transport aircraft, actually, that is also used significantly in many air forces to do in-air refueling of fighter jets, actually. So this will be also interesting to see how they're going to develop the defense supply chain that is in India, and whether or not this also will mean that they can actually use that as an opportunity to offer these particular airplanes that could be partially assembled in India also to other militaries in the world. We'll have to see what happens, but definitely interesting things, and dare I use the cliche, the sky may be the limit for Embraer if they actually play their cards right. Manisha, back to you.
JP, thank you so much for rounding up that story and that a really interesting conversation with Embraer for us. Okay, let's pivot to the US now. A quick check on the dollar. Let's take a look at how these numbers are looking. Just off a fraction there. You can see the dollar index. New inflation data has all but confirmed that the Fed will continue to cut interest rates through the rest of the year. Remember, the FOMC kicks off its two-day meeting on Tuesday, stateside. Markets certainly anticipating that in some way. U.S. consumer inflation ticking up slightly in September, but it rose a cooler than expected 3% on the year. Meantime, core CPI, stripping out food and energy, rose 3% year on year after rising 3.1% in August. And the U.S. government shutdown is entering its fourth week. At 26 days, this is now the second longest shutdown in U.S. history. Treasury Secretary Scott Bessent talked about efforts to negotiate an end to that shutdown.
Why did President Trump have to meet with Democrats? Democrats just need to go into the Senate and vote to end the shutdown.
But President Trump has said in the past, it's up to the president. He's the president. No, he said that in the past. He said you have to be a leader. The president has to lead. You have to get people into a room. You have to get a deal. When's he going to do that?
Well, he is leading, and there's no deal to do with Chuck Schumer. Chuck Schumer is trading off his polls. What's different than when he passed a clean CR in the spring? It's his polls. You know, the whole country's being held captive to AOC's polls. But let's look at the numbers. It's 52-3. 52 Republicans have voted, I believe it's 11 times, to reopen the government. 3 Democrats have. And right here, right now, I would urge moderate Democratic senators to come across the aisle, reopen the government, because I'll tell you, we're starting to eat into muscle here. This is starting to affect travel. It's starting to affect the economy. And, you know, this is quixotic. I don't know what the purpose is. I'm not sure they do.
U.S. Treasury Secretary Scott Bessent there discussing that ongoing U.S. shutdown now in its 26th day. The U.S. tariff effects are showing somewhat in economic activity in India. The latest PMIs indicate international orders are slowing down. We'll discuss the path ahead for the Indian economy with Radhika Rao of DBS. That's after this short break. We're back in 2. Stay with us. Okay, India markets are in the pre-open. The Nifty pointing to, well, a positive start to the day, but just moderately so. And that dollar cross up just slightly for the dollar. We're going to keep an eye on all of this in the wake of getting some economic numbers out of India as well. Looking at some of the big movers in the markets today, Kotak Mahindra Bank reporting a slight dip in quarterly profits, missing street estimates as it set aside more funds for potential bad loans. The private lender posting a net profit of around $370 million, down 3% year on year and below analyst expectations. Provisions jumped 43%, weighing on earnings, even as loans grew 14%. The CEO, Ashok Vaswani, said that the bank will now focus on expanding its retail unsecured business. The bank's net interest margin, too, was impacted by rate cuts, dropping to 4.54%. Asset quality, though, showed a slight improvement. Shares in the pre-open session right now, you can see they are trading off by more than 0.5%. SBI Cards too reported quarterly profits below street expectations. Net profit rising 10% year on year in the second quarter, but falling short of estimates. High operating costs weighing in on those earnings, even as asset quality improved. Tighter underwriting has helped the company amid rising credit card delinquencies. But spending on customer campaigns, offers, and higher incentives to corporate partners pushed operating costs up 24% year on year. SBI Cards is majority owned by India's largest lender, the State Bank of India. The shares right now, you can see, trading off more than 2.5%. And the IPO buzz just won't quit. India's biggest eyewear retailer, Lenskart, has filed draft papers for its much-awaited market debut. The company is seeking a valuation of around $8 billion. Lenskart has set a price band of 382 rupees to 402 rupees per share for the offer, and that opens October 31st to November 4th. The issue includes fresh shares worth 21.5 billion rupees, while existing investors, including SoftBank and Temasek, will sell about 128 million shares. Growth in India's private sector has slowed to a 5-month low in October. Flash surveys show composite PMI dropped 59.9 from 61 in September. That is also below a Reuters poll forecast of 61.2. The pullback was largely driven by a cool-off in services activity, even as manufacturing picked up from a 4-month low. Flash manufacturing PMI rose to 58.4, still expanding, from 57.7 last month, while services slipped from 58.8 from 60.9 in September. New orders continued to grow, though at their slowest pace since May, with international demand at a 7-month low. India exports to the U.S., meanwhile, have been hit by steep U.S. tariffs, as President Trump has reiterated that duties will remain until India stops buying Russian oil. Radhika Rao is senior economist at DBS Bank. She joins me now live down the line. Let's try and absorb all of this and walk our way through it. I think the first big question is, are tariffs hitting now? Is this clear evidence that it is having a negative impact on the economy yet?
Certainly. So I think I would take probably the recent export numbers or trade numbers as one of the indications. What you had seen in August and September, I think these 2 months were perhaps when the tariff impact would have shown more clearly, because the first 25% took effect in August, and then you had got the second 25%, which was because of oil purchases from Russia, which took effect in late August. So September was when these effects would have begun to show as well. You see a few undercurrents. I think what you've seen, as which something that you already pointed out, which is that shipments to the U.S. slowed down. It was growing at upwards of about 20% year on year for the past 5-6 months. You actually seen that going to the single digit as we go into August, September. But overall exports didn't collapse, which essentially also tells you that the non-U.S. trading partners, purchased more. So there was a bit of diversification play that really helped. And on the other end, if you see the segment-wise classification in terms of trade, some of the labor-intensive industries, especially textiles, gems and jewelry, did slow down in those months. But a big offset was electronics. So electronics has been growing at a very, very strong pace, helped by mobile phone exports in particular. So there are some offsetting factors that that have not, I think, fully shown the impact of the tariffs as yet. It's certainly very helpful in keeping up overall trade. But you've really seen the trade deficit widen quite considerably, especially in the latest month, which was September. And that was more to do with imports than exports particularly. So to come back to your question, I think there are early stirrings, early indications that the tariffs have impacted trade in particular. But I think really for the rest of Asia as well, we're going to go into the final quarter of the year when I think it will be much more, clearer, because you had a bit of inventory restocking, you had a bit of front loading, and all of that we think will begin to wane going into September and the final quarter of the year.
Yeah, I mean, Radhika, I wanted to drill down a little bit more on then your coming expectations for these months. We've seen this flurry of deals being signed when it comes to ASEAN over the weekend. There's been such a flurry of activity, but trade deals don't get made overnight. So in the meantime, what is going to be the upside in terms of offsetting, if any, in terms of offsetting this ongoing 50% tariff? Because it's clear New Delhi doesn't want to budge when it comes to the Russian oil.
So the Indian authorities have made it quite clear. I mean, negotiations are continuing. I think they've been ongoing for the past month or so. The Washington-New Delhi corridor has been quite busy, and partners traveling both ways. So they've mentioned that yes, they're open to negotiation. But obviously they're not going to give in to all the trade or the terms that was asked by. So they needed to be mutually beneficial from the Indian point of view. So I think I'm sure there are some concessions that have already been discussed. We've heard some anecdotal comments on things like agriculture, energy, some give and take on those fronts, as well as market access. So we'll see when the final print is out. And I do think a trade deal is imminent. I mean, we could see it as early as perhaps in November. We do think that's happening. So onto your question on, is there anything else to compensate for this trade risk? Certainly domestic demand has been, one key anchor. I think the authorities have taken kind of shifting, not only doing a supply side push to support growth, but also undertaking demand side policies. I mean, indirect tax relief, some dispensation also by the central government in terms of loan growth. All of that put together with macroprudential measures, the RBI rate cuts. So a whole lot of things being done on the domestic end, which we think is kind of telling you of a playbook that's changing. So they have now shifted to making sure that the domestic growth, the domestic engines are doing well to kind of compensate for what is happening externally. I think one missing piece which might perhaps be announced in the couple of coming weeks or so is support for the labor-intensive industries that seem to be feeling more heat. I think especially sectors like textiles, for example, in particular states, that could provide, there could be some capital support for these sectors. But apart from that, certainly looking at a much stronger domestic engine to compensate for global risks.
All right, Radhika, speaking of the domestic engine, we're coming out of a week of festivities for Diwali. I think there's always the question, isn't there? What can we expect in terms of any, the output over the course of that week? We're already looking at a slightly higher open for the Nifty, but, we're coming into a massive earnings season. First of all, just focus on what can you expect in terms of any ramifications from that week of festive celebration?
Certainly, a festive season is generally seasonally very strong for Indian markets as well as the economy. This time around, there was a double bazooka, so to speak, by way of GST rationalization as well. And I think that helped two ways. It improves the tax efficiency in terms of collections, and also certainly provides tax relief and across the board, right? So an interesting bit was that a lot of essential products, essential commodities, including FMCGs, auto, all of that benefited positively as well. So I think if you were to see what had happened during the festivity and thereafter, you're going to see, I think, sectors like FMCG do well, benefit from this tax relief, and we have also had companies coming out to talk about, especially passenger vehicles, four-wheelers, two-wheelers, also providing positive guidance. And apart from that, we have seen the government also step up their capex spending, which didn't do very well last year because of elections, but has really picked up this year. So those related industrials, capital goods segments, are the things that we think will do well. So overall, I think the guidance generally would be certainly more positive. But I think all of them will then turn to what happens post-festivity, post-GST impact, which is basically the second half of the fiscal year. I do think there'll be some carry-on benefit. Had positive finish to the monsoon as well. Still some scattering rains here and there, but the official season is ended in a surplus. So that's positive for demand, especially from a rural agri point of view. So I would think positive guidance on the ongoing benefits. I think a bit of caution perhaps in the second half of the year. But I think some of this will have, I would say, tailwinds providing a good base, at least to these companies, which was not the case, say, about 6-8 months back. I think this is what we would hear. And just a last bit on the services bit, I think that is another sector, especially the IT sector, where there's a bit of an overhang still on what's going to happen in terms of regulations, especially from the U.S. And exports point of view. But that seems to suggest that the IT companies in India have over time lowered their dependence, especially in terms of workforce mobility. So that might hold them in good stead as well. So I think that will perhaps be communicated more clearly to the market participants.
Radhika, it's a huge week for earnings. We've had Kotak Mahindra Bank come in with profits below street expectations. You've had SBI Card with similar. It doesn't bode well for the rest of the week, but, how should we be anticipating the slate this week?
Certainly for the banks, I mean, for the financial sector, rate cutting cycle is underway. The central bank has already cut rates by about 100 basis points. They might do more. That's why I think their commentary in the latest meeting was that if there's need to help the economy, they need to support growth, that they would go ahead. I think the market pricing, there is still markets are pricing in a rate cut in December, for instance, and perhaps one or two by the end of this fiscal year. So in this environment, certainly it does put pressure on NIMs, for example. So I think banks would look at perhaps improving volumes and how fast, these rate cuts can be passed, because the central bank is certainly very keen for transmission to happen and happen fast. You have seen bank borrowing costs move a bit slowly, but the non-bank, especially on the corporate bond side and commercial papers, all of that, you've seen higher transmission, and you've seen some part of lending actually shift to that part of the market. So the hope is that, in this rate cutting environment, how best can banks shield their books? I think that's where much of the commentary would be on. And perhaps some caution on general lending book, insofar as the sectors or the institutions that have exposure to some of the labor-intensive industries. I think that's where the commentary would fall, we would think.
And Radhika, just very briefly, my last question. Lenskart IPO is happening this week. There's been this real intense sort of excitement about Indian IPOs. Do you think that? What do you think of that?
Yes, I mean, India has been one of the top few in terms of the volume of initial public offerings that it has seen. I think this comes against, certainly, I would think among the corporates, there is a view that, there are more avenues to raise capital, and equity markets certainly seem to be a more exciting one at this point. I think, we don't really comment on particular names or the equity markets in general, but my sense is that it does help to have a good capital issuance, but at the end of the day, I think all of the investors will certainly look at the kind of companies that are issuing papers and, in terms of what their long-term prospects are. So I think that was where it will eventually land. But certainly from a company point of view, I think it's quite an active time to raise capital from the equity markets besides bank and non-bank borrowings.
Radhika Rao, thank you so much for joining us on the show. Okay, before we wrap up, we want to take you to some visuals from Kolkata Airport. That is where the first direct flight from India to China's Guangzhou took off. After 5 years, the two countries resumed their direct air links amid a diplomatic thaw.
Today is a very important date for both of us in India and China relationship. And I come here today to attend a simple ceremony to celebrate the resumption of the direct flight from Kolkata to Guangzhou after 5 years suspending.
Beijing-backed China Eastern Airlines will also resume Shanghai-Delhi flights. That'll start from November the 9th. And that is all the time that we have today for Inside India. Stay with us here on CNBC. Access Middle East is up next.